The Dow was closing in on all-time highs again Thursday amid optimism about global central bank support. Now, Ben, we did get some pretty dismal earnings reports out there, including those from Groupon and JCPenney, but the markets largely shrugged off those reports. Are you worried about market complacency?
Yes and no. I think what the reason we're seeing that today is that this is a stock market today, not a market of stocks. Because it's the last day of the month, we have major reweightings on at the last minutes of the day trading, so you see a huge pickup in volume. So for technical analysis, it will skew it, but the major indices throughout the world have been trading to the upside again, making it a stock market. So the individual stocks have not had the same impact as you would think. So today, again, a lot of people expecting the Dow to hit an all-time high. I'm here, unfortunately, to tell you, I don't think it's going to happen.
So there are some analysts who would argue that February being a historically weak month of the year, for this month we've seen a pretty good performance overall, and it could bode well for March through the end of the year. So you're not in agreement with that?
It's definitely it's one of the reasons at the end of January I thought the market would see a pullback is because February traditionally sees a slowdown in money flows from the individual investor. The fact of the matter is that we have continued to see flows on a daily basis from the individual investor, which is a good thing. I am still bullish. I was just looking for a temporary pullback in the market, as it were, but we continue to see money come out of bond funds, come out of commodity funds, particularly gold, and it appears that we are the benefactor of that, which is why the markets are staying where they are.
Now, heading into March, which sectors do you think are poised to outperform, and how can the retail investor take advantage of such gains?
Well, I think for the retail investor, you want to look for the pullbacks. I believe a retail investor should only be buying stocks when they go down, not when they go up. A little difficult when you're watching things on the news like today. You'll hear about the market rallying. Is there a bad time to buy stock for a long-time investor? Not really. Eventually, you may go underwater, as we say, for a little bit of time, but eventually you'll resurface and it'll be a good trade. But as far as I'm concerned, if I believe that the global economy is in fact improving, so you want to look where that's going to take place. That is in the material sectors. The money flows we've been seeing in the marketplace recently have been some of the more defensive names, again, because they're coming out of bond funds. So utilities have been acting fabulously well. The consumer non-durables have been acting very well. So I like energy as another sector. If you believe the economy is going to improve around the world, people are going to burn more oil, more fossil fuel, so energy is another area you want to look at.
Thanks, Ben. This is Andrea Say reporting for The Street.